I think there's a good chance we see high volume trading next week, which could bring in lots of volatility. So first up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. First things first, I'm still running the 4th of July sale for 50% off your first month of Bank Trade Alerts or the Stock Channel Discord. You can find out how to claim that discount by clicking on the link in the description of this video, or simply enter the coupon code FREEDOM at checkout. Right. So Friday on SPY, we were down 0.25%. And even though we are still in the bull trend, we are definitely going to be at risk of increased volume next week, which could favor the sellers. So on Friday, we did go up there and fill the gap right around 442 and then instantly saw the rejection and closed down near the low of the day. So that is a bearish rejection from resistance. And this is something you should be paying attention to because we do have this double top look, which is from that resistance zone. Now with double tops, you need to break down below the neckline to validate them, but as you can see, the bears are taking this as an opportunity for a low risk short because they know if we break out to a higher high, it invalidates the double top, and then we're likely going to those higher price targets. So it is a relatively low risk trade, which doesn't guarantee it's going to be a winning trade, but it has low risk and very high potential reward if this does indeed validate as a double top rejection. So I think there's a very good chance you are going to see very high volume, which could favor the sellers, and it could be due to this double top rejection, and the bears are now gaining confidence. Now looking at this chart, the bulls also have relatively low risk from this support at 436. So going into trading next week, I would prefer to see support failing, and that could even be on a gap down open on Monday morning below this support at 436, and then I think there's a good chance we come down here to test the double top neckline right around 431 or this breakout zone right around 429. So 429 to 431 is very critical support, but you also want to watch that support at 436 because if we break down below that, that means we're going down to the critical support zone. At the critical support zone, the bears are going to want to break down below it and validate this double top to take us to lower prices, which could take us down to 420. So this is a very simple trade plan type week. You just need to watch critical support at 436. And if you want to be bullish, that's your risk level. And if you want to be bearish, you're watching the resistance up here right around 442 to 443. And that is your risk level if you're shorting, because if we break out to a higher high, it immediately invalidates the double top, and it means we're likely going to 448 to 451. So just let the price action do all the talking and be prepared for any scenario. We break support at 436, you know we're going lower, and if we break the resistance right around 443, you know we're likely going higher. It's still a bull trend, so don't get overly bearish, even though this is a very low risk short trade idea. And that is why we saw people taking advantage of it at the end of the day on Friday, driving prices lower. On the NASDAQ 100 triple Qs, we were down 0.33% on Friday, and we also filled the gap to the upside and got rejected and closed near the low of the day. So we're going to have critical support going into next week right there at 364. Just like I said with SPY, this is a double top look from 372, and if we break the neckline down here at 357, we're likely going through a full-blown correction that could take us back down towards the 330s. So you have critical support at 364, and if we break down below that, we're looking for a retest of 355 to 357. And if we break that critical support, it validates the double top and tells us that we're going for the full measured move lower. So your critical support levels as bulls going into next week on the Qs will be 364 and 355 to 357, and the critical resistance remains 372. Above 372, we get the bull breakout, which is another short squeeze that could take us into the 390s. On the Dow Jones, we were down 0.53% on Friday, and the Dow Jones got rejected below the 20 simple moving average, but still finding support at the rising 50 EMA, which is another critical support zone at 336 to 337. And again, if we break critical support, this looks like a double top in the Dow Jones that could take us down all the way back down towards 330. Now keep in mind the Dow still has a gap to fill just above 342, but this is going to require the bulls to hold this critical support, and if we get a bounce from critical support, or you want to blindly buy here knowing that it's a low risk trade, you'll be looking for that profit taking between 341 to 342. On the Russell 2000 IWM ETF, we were up 1.06% on Friday, and intraday we were trying to break through that resistance at 185, but as you can tell, the sellers won and we closed just below that resistance, so we have no price action breakout of resistance at this time. So going into next week, you're watching one critical resistance level, and that is going to be 185, and if we break it, then you're looking for the break of 188 to get the bullish catalyst towards 195 to 200. If we get rejected from this resistance, we're looking for a retest of critical support at 180, and if we break that, it's another confirmed double top. As you can tell, I said that in every single index. So every single index is at risk of double topping here, but we need the confirmation of the break below the neckline, which is going to be this critical support zone between 178 and 180. Again, all of these are very simply traded if you just let the price action do all the talking and you have no bias on which direction the market is going to move. You need to let the price action do all the talking and then be ready to react. On the VIX, we were down nearly 4% on Friday, and I still think the VIX is going to spike between 18 and 20, but that doesn't guarantee I'm correct. I simply think these Bollinger Bands are waiting to expand because they got very squeezed during this period of consolidation, and now they're starting to expand. So I think the VIX could go a little bit lower, but ultimately I think it's going to go higher, and that does favor the bearish scenario, which we're going to get confirmation in the VIX and the price action validating those double tops. And then quickly, let's look at Bitcoin, which still looks like it's bull flagging between 29,500 and this upper resistance at 31,000. So simply wait for a break of direction in the price action from this bull flag. And just because it's a bull flag doesn't guarantee it'll break to the upside. So watch that critical support at 29,500 and you could stay bullish as long as we're above 28,000. And then looking at Apple stock, which is our market moving stock, we simply need to watch critical support at 190. And as long as we're above 190 with the bull trend, we could still reach that price target right around 197 to 198. If we break through 190, look for a retest of 185. And if we break 185, we're likely getting a deeper correction. So jumping back over the S&P 500, I gave you very simple levels to pay attention to, and from there, you simply need to let the price action do all the talking. Don't have any bias and be prepared for any scenario, and make sure you have great risk-reward setups, and you're going to do very well in this market. Don't forget to take advantage of my 4th of July sale for 50% off bank trade alerts or the Stocks Channel Discord server. You can find out more about either service or how to claim that discount by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.